as SER 250 is applicable for independent auditors. I'm not using the word stat auditor, understand? I'm using the word independent auditors. Whenever you are doing an independent audit, SER 250 you have to compulsorily comply. Now, what is this SER 250 says? What SER 250 is asking from the auditor? Look, financial statements, what is our objective? We need to give opinion whether financial statements are free from material misstatement. How a material misstatement might occur either because of fraud or because of error. Material misstatement may occur in the form of amount, presentation, classification, disclosure. It may be overstatement or understatement. Now, how a law and regulation affect financial statements? That is a main question. How a law or regulation affect the financial statements? Very simple. Taxation laws you take. TDS you take. We need to deduct TDS at appropriate rate. At the rates given by the chapter 17 of the income tax law. We need to deduct TDS at a particular rate. Now, as on 31st March, whatever TDS we have deducted, we will show it as a liability. What if you are actually supposed to deduct TDS at 10%, but you actually deducted at 3%? You are understating your liability. Are you getting the point? Because you have not deducted TDS at the right amount in the act. But remember, ultimately, if department asks for, you have to pay that late fee. You have to pay the penalty. You have to pay the interest for lower deduction. You have to pay for non-deduction. So, because of a non-compliance with the taxation law, because of a non-compliance with the taxation law, you are about to incur a liability. You are about to incur an expenditure, additional expenditure. So, and if there is a non-compliance, and the non-compliance is not identified by the company, non-compliance is not identified by the auditor, what will happen? The financial statements will be showing a lesser liability. The liability that we have, that we accrued under a statutory law. Getting it? That we didn't recognize in books of accounts. So, this is how a non-compliance with the law and regulation affects the financial statements. And remember, these laws and regulations, see, the standard uses a very vague term, laws and regulations. There are approximately in India more than, the people say 20,000 enactments. 20,000 enactments were there. Approximately, for every small thing also there are laws. Getting it? Very recently I saw this, law, where I'm taking an insurance policy. I saw this. Married Women Protection Act. There is a law. Married Women Protection Act. Like, generally, if at all we take an insurance, whatever the sum assured, getting it, in the event of that uncertainty, it will go to the nominee. But at the time, if I have any liabilities with banks, creditors, everything, whatever the insurance amount is there, that will first adjust towards the liabilities by the court, then balance only has to be released to the nominee. Suppose if the nominee is a married woman, getting it, for them, it's a protection. Insurance is taken by people across the world as a protection for the family. What if the nominee is not aware of all this? So there is a Married Women Protection Act is there. If your insurance policy is registered with Married Women Protection Act, the outsider and all cannot touch this one. It will only go to the nominee completely, irrespective of the liabilities of the insured, person insured. So we can't predict how many laws and regulations were there. Same way, for a company, every company which is doing industrial activity or whatever, they have to comply with enormous laws and regulations. Auditor has to check that, there is something called Legatrix, this one. So, this is a list of, this is how we check non-compliances with laws. You see, this is one of the, compliance audit checklist. This is something called compliance audit. So, Legatrix, like Companies Act, CSR, how many things we need to check. Companies Act, how many things we need to check. This is regarding compliance audit performed. It's one of the internal audit. It's one type of internal audit. See, Air Prevention and Control Pollution Act, 130. Compliances they need to check. The Apprentices Act and Apprentices Rules 232 checklist were there. Bombay Provision Municipality. This is actually company situated in Bombay, so they need to comply with Bombay Municipality. The Bureau of Indian Standards. This company is doing some hydrogen peroxide production. So relating to that, some 110 compliances were there. You see, so many laws we don't know at all. These are all administrative laws. Like you see, environment protection, there are so many. On environment protection, approximately you see 10 types of laws were there. Environment protection, the batteries, environment, biomedical waste, environment protection rules, e-waste management, hazardous and other waste management. These are all various acts. You see, likewise, for one of the company, one of our, friend has done this work, 4,935 legal compliances he need to check. Getting it? Sexual harassments for women at workplace, prevention, prohibition, redressal. So that particular act. Security section, SEBI. So we only know few laws of this. And we say in Instagram, CA course, 20 laws, 200 sections, 5,000 pages. Ordinary person cannot do. Only those who do are called as chartered accountants. Stupidity. Yes or no? And you see, total compliance list is like this. This is the audits. These are the audits. How challenging are they? These are being done by big four entities. Many of them are doing all this. See the compliances. It goes up to 4,935 and what they verified. Everything they'll show. 8,282 points they need to check. And everything they need to check. This is called compliance audit. In PSU audit, we do compliance audit. This is something similar to a compliance audit. This is purely law and regulation audit. Some companies, they want to, every company which is operating especially in manufacturing facility, which is having a manufacturing, they do these kinds of audit intentionally every year. Why? Because if at all they don't check their non-compliances, suddenly a big penalty will come. They have to pay bribes and all in order to come out of that situation. If a law is not complied, it will affect the going concern of the entity. Correct? So, the auditor has to check various laws. And the standard divides the laws and regulations into two types. This standard divides. Now you see so many laws, no? You may immediately say, sir, all these laws are not covered in syllabus. First of all, we don't even understand the technical terminology used in these laws. Okay, so what is e-waste itself? One important question is there. That itself we didn't understand. And inside that law, how the e-waste is generated, what are the ways to dispose the e-waste? So many were there, so many non-compliances. As a financial auditor, how many I will check? Getting it? So that's why the standard divides the laws and regulations into two types. Those laws and regulations that directly affects material amounts and disclosures in financial statements. These directly affect your financial statements. Some amount or disclosure will directly affect if at all this law and regulation is not complied. Example, tax laws, labor laws. Getting it? There are other laws and regulations. If I do violate pollution norms, if I do violate, a battery manufacturing norm, it may not result in a material misstatement in the balance sheet. It may not result in overstatement of credit or debt or nothing. But failure to comply with them will have a significant problem at a future date. It may affect the continuity of the company. Resultingly, penalties, fines and all will be levied. So, these are other laws which do not have direct effect on amounts or disclosure, but compliance with which is compulsory to avoid penalties and fines. Able to understand? So the standard divides the laws and regulations into two types. Now, type 1 law, auditor should get reasonable assurance whether these type 1 laws and regulations are complied or not. Type 2 laws and regulations, you have to perform limited audit procedure. You have to perform limited audit procedure, specified audit procedure. The standard actually uses the word specified audit procedure, but I call it as limited audit procedure in order to identify non-compliances. Just to perform limited audit procedure, try to identify is there any non-compliance by doing limited work. You are not expected to have a big checklist like what I showed. I have showed a big checklist of none, that and all you need not do. But you do some limited procedures which the standard says. By doing that, if you identify, okay. Otherwise proceed, no problem. But this type 1 laws and regulations, you have to obtain sufficient appropriate evidence that all these laws and regulations are complied. GST, Provident Fund, Employee State Insurance, Income Tax, Property Tax laws, Municipal Tax laws, getting it? All these laws and regulations have a direct impact, immediate cash flow, getting it? So those laws you have to verify compulsorily. So these laws you have to get reasonable, whereas these laws you have to simply get, limited assurance. So what is that? So what limited audit procedure for type 2 laws means what? What is meant by limited audit procedure? Simple. Inquire the management. Inquire top management whether there is any non-compliance, whether the entity is in compliance with these laws and regulations. Nothing but ask them, is there any known non-compliances with laws and regulations? First ask them. And inspect correspondence with the legal and regulatory authority. Look at the penalty ledger account. Look at the legal fee ledger account. For what purpose it is paid, to whom it is paid. And inquire the lawyers to know details of any pending litigations under environmental laws, product safety laws, consumer safety laws, labor laws. So just to perform this, in the process of doing this, if you came across any non-compliance, see whether it is appropriately dealt in the financial statements and disclosure is made, check it out. Suppose you discovered non-compliance, financial statements are not disclosing it, financial statements are misleading it, then give a modified opinion. Able to understand? So this is regarding type 2 laws, limited audit procedure you have to perform. Now, so what is the responsibility of the auditor? First of all, who is responsible for complying with all laws and regulations? Management. Management is primarily responsible to ensure that the entity operations are in accordance with the laws and regulations. Now, what is the responsibility of auditor? The auditor has the responsibility. The auditor shall obtain sufficient appropriate evidence regarding compliance with type 1 laws and regulations. Don't write the word type 1 in exam. In exam you have to write, auditor shall obtain sufficient appropriate evidence regarding compliance with those laws and regulations that have a direct effect on determination of material amounts and disclosures in the financial statements. Type 2, to perform specified, actually institute uses the word specified audit procedure, but I renamed it as limited, but in exam please write the word specified. Specified. Perform specified audit procedures on audit procedures to identify incidents of non-compliance related to other laws and regulations that do not impact directly the financial statements. However, compliance with them is compulsory in order to avoid penalties and fines. This is actual sentence. Getting it? And once you identify how to report non-compliance, if you identify a non-compliance, how to report, this is what the standard deals with. What the standard ultimately says, you see. Reporting of non-compliance. The moment auditor identified a non-compliance, first report to top management, those charged with governance. And how do you report in audit report? Suppose if non-compliance is a material effect in the financial statements and is not properly reflected in financials, you discovered a non-compliance, not disclosed, non-disclosure, material misstatement, give a qualified opinion or adverse opinion. Suppose you are not able to get any evidence on non-compliances, you are not permitted by management to have access to that legatrix, that legal compliances checklist. Management will prepare that kind of checklist in every company. You need to ask that checklist, see that. Getting it? If management did not give, depending upon the pervasiveness, give qualified. If you think that is so pervasive, give disclaimer. Don't express the opinion at all. Are you clear? Sir, can auditor find, can auditor find any indicator for non-compliances? Yes, there will be some indicators. As part of risk assessment, you should keep all these indicators in mind. If any investigation is going on currently, that's an indication that some sort of violation might have been done. Payment of fines and penalties. Suppose in the ledger account, fines, penalties account is showing higher amount. For what purpose they paid a fine? For what purpose they paid penalty? That might be a reason of non-compliance. Unspecified services, unspecified loans to consultants. On this, I remember a news always in Walmart in United States have paid approximately some 250 or 300 crores penalty Because in the Walmart consolidated financial statements, there is a ledger account, there is a account which shows payment to others, for which there is no explanation. Upon investigation by Anti-Corruption Bureau in the United States, it is discovered that this is an amount paid to bureaucrats in India for getting license to operate best price stores across India. Getting it? Since they paid bribes and obtained licenses, the Anti-Corruption Bureau in the United States have levied a penalty of 300 crore. So payment to unspecified services means there is no reason explained that might be a bribe. That is an indication that some non-compliance is there. And you are purchasing at a higher price or at a lower price compared to arm's length price. This is a non-compliance with the tax law. Unusual payments in cash, non-compliance with the tax law. Unusual payments for lawyer fees. Why you are paying too much of legal fee? It's an indication that some issue is going on. And transaction with companies engaged in tax haven, it might be a non-compliance of GAAR principles, general anti-avoidance rules. Getting it? And unauthorized transactions, adverse media comments. These are all indications of non-compliances. Whenever you find an indication, what auditor has to do? Investigate and try. Is there a real non-compliance? Remember, indicator is just a symptom. It is not a real non-compliance. They will give you this sentence. They will give you this sentence as a true or false question. An indicator, they will remove the word, doesn't. An indicator mean that there is a severe non-compliance. False. Indicator is not meaning, indicator does not mean there is actual non-compliance. Indicator is a symptom based on which you should investigate to identify if there is a non-compliance. Indicator is a suspicion. It will raise suspicion. You have to be skeptical, able to understand. Next, what is non-compliance? First of all, non-compliance definition. Does it include employee personal misconduct? Employee, while going on road met with an accident or made an accident. Is it related to company? Exactly. Non-compliance means an omission. Non-compliance means an actual commission by entity, nothing but top management or employee. Either intentional or unintentional, some activity they did or some omission they did which is contrary to prevailing law and regulation, and that's called non-compliance. It does not include personal misconduct by top management of the company which are not related to business. This is important for true or false statement or MCQ. So with this, the standard is main content is over. Clear? So what is the audit procedure? What is the audit procedure under SER 250 for identifying non-compliances, or what is the audit procedure? Inquiring the management, inquiring those charged with governance to identify whether is there any non-compliance. Do the company establish a risk assessment system for identifying non-compliances? Do company establish a quality control system for timely compliance with laws and regulations? Is there any, look at the internal audit reports, look at the lawyer advisors, look at the fees and legal fees penalty account. This is all auditor has to verify in order to identify non-compliances. This audit procedure auditor will perform only when there is an indicator. Generally, when there is an indicator, auditor will perform this audit procedure in depth. Clear? This SER 250 over. Reporting we discussed. What is SER 250 we discussed. Clear? Confident? How many of you have gone through this SER 250 earlier? Oh, mostly. Next. So that's about SER 250. Next. SER 501. At least I'll cover two parts of this. Then balance will cover after lunch. Now, so what is SER 501? So specific considerations for selected items. Okay, yeah. Specific considerations for selected items. So you should get audit evidence, specific considerations for selected items. See, this is actually an additional extension to 500. It's actually extension to 500. This 501, 505 were extensions. Originally they are part of 500. Later, almost 10 years back it happened. Later it was separately given as 501, 505. Now what are the selected items? The standard selected 3 items. The standard selected three items. Existence and condition of inventory. Existence and condition of inventory. In fact, let me not call existence condition here. Okay, the standard has selected three items. Inventory. Okay, litigations, segment information. Now, what auditor has to specifically consider? What auditor has to specifically consider for these selected items? What auditor has to specifically consider? The auditor has to specifically consider existence and condition. Existence and condition of inventory. So with respect to inventory, which is a selected item, auditor has to specifically consider its existence and condition, not valuation. Remember, regarding valuation, the standard is not dealing with. MCQ, a question has been asked on this. Getting it? So SA 501, audit evidence specific considerations with selected items, deals which of the following? Option A, existence and valuation of inventory, existence and condition of inventory, condition and valuation of inventory, existence, condition and valuation of inventory. Most of the people selected the last option. Valuation valuation also we will check. But standard will not check about. Standard is not talking about valuation. Standard is talking about existence and condition of the inventory. Only the physical attributes it is being tested. Able to understand. Next, litigation. It is talking about completeness of disclosures. Completeness of disclosure. It is only talking about completeness assertion. It is only talking about completeness assertion. This is talking about existence assertion. Now, segment, disclosure as per applicable framework. It's actually talking about what? Disclosure as per applicable framework of segment information. So these are the selected items. Auditor has to check these three. With respect to inventory, existence and condition, you have to check. Litigations, whether all the pending litigations against the company are completely disclosed. This is the actual verification point. Third one, whether segment information has been disclosed by the company in accordance with the applicable financial reporting framework. Accounting standard 17, Ind AS, what is the number segment? 108. So if it is 108 which is applicable, 108 you have to check. So schedule 3, division 2 and 108 requirement you should check. Able to understand. So regarding these three, now how to do audit? What specific considerations auditor shall do? For litigations, how do you evaluate completeness? In the last exam, this question was asked in May 2022, not what you thought. In that, internal point has been asked. If I show you, you will shock. Is this how the question will be framed? Litigations and claims were there, right? In the D point was there, right? 3 marks question was asked on this D point. On this D point, 3 marks question was asked. How the question was asked is, in what are the circumstances? The external auditor communicates with entity's legal counsel in respect of obtaining audit evidence regarding completeness of litigations. 3 circumstances. Now, when management refuses to give when management refuses to give permission to directly talk to the legal counsel, or entity legal counsel refuses to respond, or auditor is prohibited from responding, or the legal counsel was prohibited to responding, auditor can directly talk with the entity's external legal counsel. So this is the question, which was asked. Getting the point? In what are the circumstances, auditor will be trying to communicate with legal counsel. So this question has been asked. Getting the point? Please look at this suggested answer on this just once. And one more misconception I'll tell you. Since it is asked in last time, next time it will not be asked. Don't do that. Have you seen the people? They'll straight away ignore all the questions. Last 3 attempts, whatever questions are, they'll ignore. Examiner, whenever an examiner, suppose if I am the examiner, I will not look at last time enna question ketachpa. Amma, idu ipo keka kuda. Appadalla we don't think. Getting it? Nobody, even if at all a paper is given to you, if at all you were given an option to set up a paper, how will you set the paper? According to you, whatever you feel important, you will test. Professional judgment again there also. So what will be tested, what will not be tested depends upon what is tested last time, what is tested that before time. No, adalla irka. Getting it? So litigations and claims, what auditor has to get? Evidence. Auditor has to get evidence by performing the following procedure. Whether complete disclosures were made, inquire management, wherever applicable, in-house legal counsel, internal company, internal lawyers will be there. Ask them. Review minutes of the meeting and communication with external legal counsel. Review legal expenses account. Get direct communication from the entity legal external counsel. If management denies permission, or meeting with external legal counsel, if denies permission, the entity legal counsel refuses to respond to the letter of inquiry, the auditor has to perform alternative procedures, and if that alternative procedure also after performing you are unable to get evidence, you should modify opinion. And finally, get a written representation from the company that all the pending litigations and their impact on the financial statements were completely disclosed in the financial statements. Nothing is omitted. Get a disclosure. Clear? Then segment information. What auditor shall get? Auditor shall obtain evidence regarding whether the segment information disclosures, are they made as per applicable framework? Are they made as per Ind AS 108? Are they made as per AS 17? Are they made as per Division 1, Division 2 and Division 3? Auditor has to check this. Now, these accounting standards gives you some methods to identify segments, reportable segments. Not every segment will report. First of all, how to identify a segment, there is a formula given in the accounting standard. How to identify reportable segments. Getting it? See whether the methods followed by our organization, are they matching with the methods given in the respective accounting standard. And you also reperform calculating reportable segments using that method. See how many reportable segments came and how many they have reported actually. And what are the segments that were not reported, why they have not reported. Check it out. Getting it? Now you see, obtain an understanding of methods used by the management and see that these methods are in accordance with applicable framework. If possible, test the methods and perform analytical procedures. Last year, how many reportable segments were there? This year, how many reportable segments were there? Why these segments were not reported? Does it come under discontinuing operation? All that you need to check. Clear? All of you? So next, with respect to inventory, auditor has to check evidence. Auditor should get evidence regarding existence and condition of inventory. Existence and condition of inventory. Let us finish that. First, how do you check whether inventory is really existing? In what condition it exists? First, attend management accounting. At the year end, it is compulsory for the auditor to attend physical verification activity performed by management. But remember, we will have numerous clients. To how many client locations I will attend? That's why what they said, if inventory counting is carried at some other date or you are unable to attend at that particular date, then plan another date and then attend. So sometimes you can directly go and do inventory inspection. This is called surprise visit. This is called surprise visit. Suppose inventory inspection is completely impracticable. You are unable to verify inventory at all. Try to get evidence about existence and condition of inventory by performing alternative sources. You are unable to. Example, inventory is in transit. Inventory is with third party. You are unable to go to that location. Get external confirmation. That's what given. If the inventory is in the custody of third party, this question was given previously in one of the exam. When the inventory is in the control and custody of a third party, write audit procedure. If inventory is in the custody of third party, request confirmation from the third party. Suppose you are having doubt about the confirmation given by third party, you directly attend or arrange some other person to visit a third party premises, obtain another audit report. Nothing but you are sending another auditor, right? Get his report, stock audit report, and inspect the documents regarding inventory held by the party. What is the proof that inventory is lying with the third party? Request confirmation from other parties where inventory is pledged or collateral. In case of collateral and pledge, get confirmation from other party. Suppose it's a gold jewelry company, some amount of loan they need, so they kept gold as pledge to the banker and got a loan. Here inventory is with the banker. Look at the loan document, look at the grams mentioned, look at the kgs mentioned. Getting it? That's it. So this is the standard. Now they will ask you this particular question. When auditor is attending physical verification activity performed by management, what points the auditor will keep in mind? Evaluate how the management is counting. Inspect inventory. Inspect means what? Some items will be there, no, some inventory. Look at the boxes. Are the boxes damaged, tampered? Is the boxes having inside the box, is the asset is there or not? Getting it? Perform test counts. You also count a test. Suppose when you're observing, some management person is counting and counting. This fellow is writing the number. Whatever the count he said, whatever this fellow write, is it correct or not? You also go and do test count. And reconcile physical inventory, whatever is there as per the records. In the same store, records will be there, reconcile. If any discrepancy is there, how they were resolving it. Is it excess or is it shortage or is the inventory kept at some other location? Identify. That's it. Are you clear? This point can be tested as a true or false again, or can be tested as an MCQ or case-based MCQ. Anything can be framed on this. You have to read and understand its impact as a whole. You should read. Just reading means not remembering. Don't try to remember the content. You will never remember. Try to understand the content. Naturally you remember. Remembrance is a byproduct of understanding. If you are not remembering means actually you didn't understand. Simple. Getting it? That's about this SA 501. Understood the exact standard completely. So what is selected item? What is specific consideration? You need to understand at that level in a holistic way. Clear? That's it. Now simple, if at all I was not given access to check existence and condition of inventory, I'm unable to get evidence. What will I do? Modified opinion. Which opinion? Qualified or adverse? Question should be qualified or disclaimer. Getting the point? Then, suppose completeness of disclosures, information was not given. Qualified or disclaimer depends upon pervasiveness. Suppose some pending litigations were not disclosed at all, then qualified or adverse. Segment information not made as per applicable framework, qualified or adverse. Management is not permitting me to check segment information, qualified or disclaimer. Understood? So the next standard is SA 505, which is external confirmation. SA 505, external confirmation. So what is an external confirmation? It's a direct confirmation. This is also called as direct confirmation. This is also called as third party confirmation. This is a confirmation obtained directly by the auditor from third party. It's a confirmation obtained directly by the auditor from third party. There is a question on this. Like when analytical procedure cannot be applied. Or they say when test of controls are not at all reliable. When test of controls are not at all reliable, it is better for the auditor to get confirmation from third party. Or if there is a significant risk involved in a particular item, if there is a significant risk is involved, then the best course of getting evidence is through external confirmation. When the item is involving significant risk, how auditors should respond? Obtain external confirmation. The link I'm telling you in SA 315 to this link. Now, what is external confirmation? It's a direct written response obtained by auditor. Nothing but it's a response to the auditor from the third party. We also call it as, also known as confirming party in either paper or electronic form. So this is called external confirmation. Now, what is the procedure for external confirmation? First, what is the procedure? See, first of all, auditor should decide where and all external confirmation should be obtained. First, auditor should decide the information where he want confirmation. What determine the information to be confirmed? Like, should I need in debtors? Should I need in creditors? Should I need in loans and advances? Where? In respect of what information? What and all informations I want confirmation. Then I need to select conforming parties. Okay, I decided trade receivables, trade payables, something. In trade receivables, we have some hundreds of customers from whom we should get confirmation. Then send the request. Now this request can be sent in two formats. One is positive confirmation request, another one negative confirmation request. Where a negative confirmation request can be used, where positive confirmation request can be used, standard has given guidelines. Getting it? Then in these, and send the request including follow-up request. So this is what external confirmation procedure. What is this called as? External confirmation procedure. Write about external confirmation as an audit procedure. Just a minute. So in the main material, we have little more discussion, I guess so. 160. Yes, 160. Same only was there mostly. I think in CA inter material, we have given little more extra content. Just let me check that. See, the problem with ICA book is they don't have this entire matter. Only from pronouncement you have to copy this. Or from CA inter material we have to copy this. Which one standards? We can't prepare directly from pronouncement because it will become again excessive. So in this we will see SCA 505. And you see here, we have given little more in-depth information was given at CA inter material because it was there in the CA inter study material. Getting it? And definitely this kind of in-depth analysis also can be asked questions. Now you see, what is the external confirmation procedure? First, determine the information to be confirmed. So external confirmation procedure frequently performed to confirm regarding outstanding balances or account balances, or they can also be used to confirm terms and conditions. We can confirm about transactions. We can confirm regarding amount due to lenders. We can confirm regarding existence of property title deeds with lawyers. Getting it? They'll ask you a question like this. They'll straight away give this sentence. External confirmation procedures are frequently performed to confirm or request information regarding account balances and their elements. Further, the external confirmations can also be used for confirming certain other things. What are they? So you need to give any 4 points in this. It will be asked for 4 marks. Getting it? Only this itself can be asked for 4 marks. Next. Then you need to select the confirming party. First you decide the information, what information you want, what item you want to select. Do you want completeness of debtors? Do you want existence of debtor? Which assertion you want to test? Accordingly, select the confirming party. Now you see, response to confirmation request provide more reliable audit evidence. When confirmation requests are sent to a confirming party, the auditor believes is knowledgeable. To whom you need to send this confirmation? Knowledgeable third party. You need to send the confirmation letter to whom? Knowledgeable third party. What do you mean by knowledgeable third party? They have given an example. For example, in a financial institution, official who is knowledgeable about transactions and arrangements for which confirmation requested may be the most appropriate person from that financial institution from whom we can request confirmation. Confirmation party means not just the company, the other company, debtor, creditor. Inside that, who is the right person? Able to understand that one. Then design the confirmation request. The design of request may directly affect the confirmation response rate. What is confirmation response rate? Suppose if I send a positive confirmation request, in that reply is must. The choice of words, the way you draft, everything that matters, they affect response rate from the third party. How far the third party will respond. So it will affect. And the reliability of the evidence. The following are the factors when designing confirmation request. This itself can be asked as a separate question. What are the factors the auditor should keep in mind while designing a confirmation request? While designing a confirmation request, while exercising audit procedure as per SCA 505. This question can come. So what factors auditor should consider? Risk of MMS, the presentation of the confirmation request, prior experience on the audit, whatever the experience you have previously, depending upon that is a factor. Suppose I'm doing audit of a company which regularly interacts with their customers and suppliers. They regularly settle the accounts between them, statement of accounts they regularly bring and settle everything, everything is pakka. And even our client, customers and suppliers are so responsive. Getting it? You send a normal letter, they'll immediately respond. That is the kind of experience I had previously. Then my response, the way I design the request can be different. Simple. Should I use a positive confirmation pattern? Should I use a negative confirmation pattern? This is the question. Should I use a positive confirmation pattern or a negative confirmation pattern? That is a question. And assertions being addressed. What assertion? You want to check whether outstanding balance is correct or not, or you want to check whether a transaction which is already entered, closed, settled, you want to check that completed transaction. Which assertion you want to get? Accordingly, you need to take confirmation. Accordingly, you have to design confirmation. Suppose, negative confirmation request. What is negative confirmation request? I'll send a request. The other party has to respond. The other party has to respond only he want to disagree. Only when he want to disagree. Your choice of words will reflect in such a way that other party will reply only if you disagree. Very simple. How the drafting will be done? Simple example. We, the auditors of XYZ Limited, for conducting statutory audit for the financial year 21-22, as part of our audit, while obtaining audit evidence, we are given certain authority to get external confirmation. Out of this, we have selected your company as part of our sample, random sampling, something you will mention. And it is observed that in the books of accounts of our client, as on 31st March, the outstanding amount receivable from you is 10,50,000. Kindly reply if you disagree with the above monetary amount. Kindly reply if you disagree. Which means the other party, and we will also further mention, ignore if the above balance is tallied with your records. So ignore this letter if the above balance tallied. Which means we are indirectly asking third party to reply for what? Only if you want to disagree. Okay. If you want to disagree, please reply within 3 days from the date of receiving this confirmation. Like this we will send. If at all within 3 days we didn't get any reply, we assume that the amount is matching. Getting it? Now, whereas in positive confirmation request, the below paragraph will change. Kindly reply what is the outstanding balance reflected in your books of accounts blank. Please fill us and send the reply within next 3 days. Which means here, whether it is matching or not matching doesn't matter. What is outstanding balance as per his books of accounts, he should fill it and then reply you. Getting the point? So here, positive confirmation reply is mandatory. Now, which is superior? Obviously, positive confirmation request is superior method because it is what an effective communication. Negative confirmation request is risky method. If at all, the other party have not seen mail itself, the other party have not received the letter itself, 3 days over, you assume that it is matching. You may end up taking up a wrong conclusion. So, however, the standard says negative confirmation request is risky. Though it is risky, you can use negative confirmation request in certain cases. When the risk of MMS is low, getting it, and you obtain the operating effectiveness of controls. You already controls are working effectively, and moreover the risk involved is very low in that particular party. You can use negative format. Or there are large number of small homogeneous account balances, small accounts, immaterial balances not required. Or low exception rate is expected. What is it? Low exception rate is expected. Now, low exception rate. What do you mean by exception? What do you mean by exception? Exception is a difference between amount requested to be confirmed by the auditor and amount lying in the books of accounts. 2, we have to compare with the response given by third party. Getting it? Amount requested to be confirmed by auditor or prevailing in the books of accounts and amount confirmed by third party. Suppose in our books of accounts 10,50,000 outstanding balance is there and that is what I requested in the confirmation letter. And whereas third party replied saying it is 9 lakhs. The third party said it is 9 lakhs. This is not misstatement, understand. This is called exception. This is called exception. Now, whenever there is an exception, we need to investigate further. Is it a material misstatement in our books of accounts, or is it a material misstatement in third party books of accounts? So, in a true or false question, they'll give you exception definition and ask you, is it a material misstatement? No. Material misstatement means when the amount is not presented as per applicable financial reporting framework, it is material misstatement. When the information requested by you and information confirmed by third party differs with each other, it is initially treated as exception. When it is treated as exception, you need to investigate further why there is a difference. Is it mistake in the third party accounting, or is it a mistake in our company accounting? Where the mistake went? So you need to verify entire transactions happened in the past. Then you will discover, is it a material misstatement in our books of accounts or misstatement in the other party books of accounts? Able to understand. So exception is not misstatement. Don't confuse. Getting the point? If exception rate is low, for a particular party, the exception rate is low. Why? How can you say low exception rate? With that party, very recently, our organization communicated and settled the records. Getting it? And when I saw already communication is there, 1 week before the audit only communication was there. This is the outstanding balance from third party. Obviously, now once again, if I send a letter, I am not going to get a different balance. So exception rate is very low. Or low chances of non-response. Low chance of non-response means what? That the third party's nature is such that he will reply for every mail. He will reply for every communication. Definitely when I send a negative confirmation, if I did not get reply, I can confidently say that he has gone through the letter, saw the condition, that's why he didn't reply. Getting the point? So a low response rate, a very low non-response rate. Getting the point? The non-response rate is very, very less, which means high response rate from a third party. To all of them, you can send a negative format of confirmation. Remember, negative confirmation provides less persuasive evidence than positive confirmation. Accordingly, auditors shall not use negative confirmation as a sole substantive procedure. Sole substantive to address an assessed risk of MMS assertion unless all of the following are present. The risk is low, the items are small, the exception rate is less, and low chances of non-responses. This entire paragraph can be tested as an MCQ. It is end. It is end. All should be considered. Unless the following all present, don't use a negative confirmation request. The balance must be immaterial, risk must be low, the exception rate is low, the chances of non-response is very less. Only when all these characteristics present, we can use a negative confirmation. And remember, negative confirmation request provide less persuasive evidence. They'll give you a question like this. Negative confirmation request provides a less persuasive evidence than positive confirmation request. Comment. You need to write this answer. Are you all clear? Next. So what is exception? They have given definition here. Exception means what? It's a response from the third party. What it indicates? It indicates difference between what? Information requested to be confirmed by auditor, or this is contained in entity records, and information provided by confirming party. Whatever information confirming party provides, whatever auditor requested or contained in entity records, when there is a difference, we call it as exception, not misstatement. Are you all clear? That's it. The standard is over. SFI not 5. Now, here one more point that we need to understand is, what if management refuses? What if management refuses you to send a confirmation request? Why management is asking? Reason. Look at the implications. Okay, management is refusing. Okay, if I don't send confirmation, what is the implication on audit? What is the risk of fraud? What is the nature and timing and timing extent of alternative procedures? If I don't get evidence from one method, I'll try another method. So what is the additional time that it takes? Then, if alternative procedure is there, I'll perform alternative procedure. Suppose if management refusal is unreasonable and you're unable to get evidence alternatively, you communicate with top management and give a modified opinion as per SA 705. Getting it? Then, suppose third party replied and I have a doubt on the reliability of the third party. If I have a doubt, if auditor identified that give rise to doubt about reliability of response, please do further audit work to resolve this doubt. If auditor determines response to a confirmation is not reliable, identify what is its implication and try to get evidence from alternative. If alternative way is also not possible, ultimately you end up getting no evidence. Again, which opinion? Which opinion? Modified opinion. Getting it? Are you all clear? Now here, another question that may be asked. What are the factors that help in determining external confirmation procedure as substantive audit procedure? Which factors you will take into account while determining whether to use external confirmation or not? Here my question is, how to use external confirmation? No, that is not. Why should I use? Should I use this method or not? What factors I will consider? See, although external confirmation provide audit evidence, some assertions they provide less relevant evidence. External confirmation provide less relevant evidence relating to recovery of account balances than they do for their existence. What do you mean by this? As on 31st March, what is outstanding amount? If third party confirms, I only get that money. I only get that evidence. But just because third party confirmed that as on 31st March 10 lakh 50 that is outstanding, does it mean that he will pay later? Do we get evidence about recoverability of a balance through external confirmation? No. We only get about existence. We only get evidence about the existence of transaction. External confirmation generally we get only for proving existence or occurrence of a transaction rather than valuation aspect. Able to understand? Then another example, confirmation request for bank balance often include request for information related to other financial statement decision. Like the auditor may determine external confirmation procedures for one purpose performed for one purpose, provide an opportunity to obtain evidence about the other matter. Like this is like through external confirmation, based on the information given by third party, sometimes at very rare cases, we may get some additional information as well from the third party. We may very rare cases get additional information. Example, when we are communicating with one of the vendors like suppliers staff, the supplier staff may give us some additional inputs like that so-and-so employees involving in collusion, some sort of thing. Getting it? So if at all this kind of benefit is high, auditor may decide to use external confirmation. And confirming party's knowledge of the subject matter. Suppose to the third party whom I want to send confirmation, if I feel he is knowledgeable on the subject matter, what I am asking, okay, send a confirmation. Suppose the third party, whoever is about to confirm me, he doesn't have any idea on this, don't use this external confirmation because this is not an effective audit procedure. So when to use is also very important. The ability or willingness of the confirming party, that is another factor. How far the confirming party is willing to respond. Like generally, third parties, they will not respond to auditor directly. No sir, we are confidential, we have to maintain confidentiality. You might have faced the situation. No sir, we are auditors of this company, we don't leak this data. No, he's still not be willing. So because he don't want to accept responsibility, or he may consider too much of time to respond. And because of the potential legal liability resulting from confidentiality breach, all these doubts, getting it? And may account for transaction in different currencies. Maybe the transactions are in different currencies. In that case also, external confirmation will be little difficult to resolve. Getting it? The other party, if at all he doesn't have any idea about foreign currency transaction, and my client's third party is somewhere in foreign country. So these kind of issues will come. Then may operate in an environment where responding to confirmation is not significant aspect of day-to-day operations, or his environment do not support responding. Or confirming party may not respond, or may respond in a casual manner, or may attempt to restrict reliance placed on the response. So like you can't believe the response because they don't want to respond. The objectivity of the intending confirming party. How far the intending confirming party is independent in replying the information which I am asking for. All these factors plays an important role. Whether should I use external confirmation or not. 1. Reliability, independence of the confirming party. Willingness of the confirming party. Confirming party's knowledge of the subject matter. And how far external confirmation provide an opportunity to obtain evidence about other matters. Not only account balances. What about other matters? And how far external confirmation provide relevant evidence. Getting it? Only if I am asking about external confirmation regarding existence of account balance, then that is fine. I want to know recoverability. External confirmation may not be a suitable option. Getting it? So this is also a question that can be asked, and this is important topic also. This is important topic also, which is not given in CA final material. This is there in the application material, but since it is not given, see, for all this, institute book of CA final is asking you to refer CA inter book. Getting it? In CA inter book only all this was discussed in depth. It's not discussed in final book also. Even if you look at pronouncement main standard, this is not there. Only in the application material this content is there. Are you getting the point? If possible, what I'll give an advice is for everyone, better for these standards go follow CA inter book, because for final book do not have all this. Final book do not have entire this discussion. If possible, give a single reading at least, so that you will not feel something new when the question paper was, when you look at the question paper. These standards 501, 505, 510 and 560 also, 580. For these, please follow my CA inter book. Getting it? For these 5 standards, obviously these 5 are important. If possible, 250 also look at CA inter book once. So CA inter book, I told right where to download the material. There itself you will find November, applicable for November attempt book is there. So you will find the book in 3 parts: part 1, part 2, part 3. Part 3 book will contain standards. Getting it? So there the standard is comprehensively given. At CA final main standard, if you see, you will not find anything. Pronouncement inside that, some contents were there important which are covered in CA inter, and there is a high chance that that will be tested. Are you all clear? That's it. So with this, external confirmation is done. Next. Then initial audit engagement and opening balances. The next one is initial audit engagement and opening balances. Initial audit engagement and opening balance. I'll directly open this. Now, SA 510, initial audit engagement and opening balances. There are 2 important aspects. Totally 3 aspects are covered. In this standard, 3 aspects are covered. 1, it is talking about predecessor audit report. One aspect is it is talking about predecessor audit report. Another aspect it is talking about is accounting policies. Another aspect it is talking about is opening balances. There are 3 aspects it is talking about. 1, predecessor auditor. What opinion predecessor auditor gave in the previous year? Getting it? Previously, who is a predecessor auditor? He is an auditor appointed for conducting audit of prior period, whom you replaced in the current year. You have replaced him. Last year he did audit. This year you are doing audit. So we call him as predecessor auditor. Now what is your duty here? Predecessor auditor might have given some opinion, right? Suppose if predecessor auditor has given a modified opinion, look at the reason why he gave modified opinion. And check the circumstances because of which he gave modified opinion. Those circumstances present in the current period as well. They are present in the current period as well. If so, are they material in the current period? Are they relevant in the current period? Are they affecting the financial statements of the current period? If so, give modified opinion. What is it? Give modified opinion. Further, in other matter paragraph, mention that previous year audit was performed by predecessor auditor and he gave modified opinion. What is the date of audit report? Just to mention in the other matter paragraph. Clear? All of you. This is a requirement even as per SA 710. If previous year financials were audited by another auditor, we have to give that information in other matter paragraph. Are you all getting it? Next. accounting policies. What auditor has to check? Auditor has to check only one thing, whether the accounting policy is reflecting in the opening balances, whether the accounting policy is reflecting in the previous year, were they consistently applied in the current year? Check it out. If not, if there are changes, how the changes were accounted. Are they accounted as per applicable financial reporting framework or not? You have to check it out. Suppose if the accounting policies are not consistently applied and the changes were not appropriately accounted and disclosed, auditors shall give modified opinion. Then, opening balances. Auditors shall obtain sufficient appropriate evidence that the opening balances are free from material misstatements. And you need to perform audit procedures in the current year, right? On the same ledgers, where there is opening balance is there, you will do some audit procedure. Did you got an evidence which contradicts with the opening balance? Did you got any evidence that contradicts with the opening balance? Means you got some evidence in the current year that reflects, that mentions, that indirectly gives you an idea that opening balance was materially misstated. Suppose opening balance of debtor, a particular customer account shows 10 lakh. But in the current year, we only received 8 lakh. In the April month, or subsequent payment was only 8 lakhs. When we inquired management why 2 lakhs was not received, when we inquired the third party customer, he only said 8 lakhs is correct, he said not 10 lakhs. When we upon investigated, we discovered a material misstatement in our books of accounts in the last year, which was not identified by either us or maybe previous auditor. Now opening balance contains a material misstatement. What should we do? We should account it as a prior period item in the current year and rectify that. If at all the prior period item rectification and all was not performed by the company, we will give modified opinion. Getting the point? So we'll look at the theory. So first of all, what is an initial audit engagement? It is an audit engagement where prior period financials were not audited at all, or where the prior period financials are audited by previous auditor. Then it is called as initial audit engagement. In initial audit engagement, you are even more concerned about opening balances. Why? Because you are taking charge of the audit for that company now only. So in that case, opening balances is extremely important. At least last time you are the one who is doing audit. Current year you are also doing audit. You need not worry much about opening balances. Able to understand? So what is the opening balance? There is a definition for opening balance. Understand? Opening balance consists of, opening balances are nothing but the account balances which exist at the opening date, beginning. Opening balances are nothing but closing balances of prior period. They reflect transactions and events of prior period and accounting policies applied in prior period. Opening balances also include matters that require disclosure, nothing but whatever we disclosed as contingent liabilities in the balance sheet of profit and loss account or notes in the last year, they will also be treated as opening balances. Not only balance sheet item, even notes to accounts, whatever disclosures we are giving, that will also form part of definition of opening balance. Getting it? Now what is the audit procedure for opening balance? First, obtain whether opening balances contain material misstatements. How do you check this? Prior period closing balances will be there. No. Whether are they correctly brought forwarded or not, you have to check. And wherever adjustments were made, if at all, see whether they were shown as prior period item. And also see whether opening balance reflect application of accounting policies in the last year. Nothing but same accounting policies followed in the current year or not, check it out. And perform one or more of the following. This is sub point 1, this is sub point 2. After see, this is sub point. See whether audit procedures you are performing in current period. Are they giving any evidence relating to opening balance? What is meant by audit procedure performed during the year? That's what. Trade receivable, 10 lakhs balance is there in our books of accounts. Current year, we are verifying some sales purchases. We are also obtaining confirmation for trade receivables at the closing. Opening 10, closing 10 only there. What is why? What happened? You need to inquire. You may find it's a fictitious sale. Getting the point? Next, perform specific audit procedure to get an evidence on this. Like opening trial balance will compare with previous year balance sheet. Many of you would have done opening balance verification. You would have taken audited balance sheet and cross-verified like this. Yes or no? That's what. And auditors should check consistency of accounting policies. See whether they are consistently applied. Now what is the conclusion? If you conclude opening balance contain materially misstated and effect of the misstatement is not properly accounted or presented or disclosed, give a qualified or adverse opinion depending upon the severity. Or if you are unable to get evidence for opening balance, give disclaimer of opinion. Generally, when prior period financial statements were not audited, getting it, and it is creating utmost difficulty on the part of the auditor to conduct audit, the auditor can withdraw from the engagement. If withdrawal is not possible, auditor will give disclaimer of opinion. And regarding consistency of accounting policies, suppose if the accounting policies are not consistently applied, no problem. However, changes in the accounting policies are not adequately presented, then give qualified or adverse opinion. What if predecessor auditor report contains a modified opinion? What is the reason? Just check it out. If the reason is relevant and material for current period, you also give modified opinion as per SA 705. That's it, SA 510. Clear? All of you. Next. Related, 1 minute. Related part, I'll come to that later. Yeah, please. No, if it is pervasive, the balances, obviously, when opening balances evidence is not there, if previous year audit is not conducted and people are asking us to conduct audit, it is better not to go with qualified option. It is better to go with the disclaimer. Or we should insist on the management that we will conduct audit from last year. First, close the last year audit, ensure that the opening balances are free from material misstatements, then continue with the current period audit. Getting it? We clearly mention. Sorry? Which one? See, that's what. If at all, opening balances were not audited, if prior period financials were not audited, if you decided to give a disclaimer of opinion, you directly give disclaimer, other matter paragraph and all will not come into picture. When auditor is giving disclaimer, he will not be using emphasis of matter para, other matter para, nothing. When you are not giving opinion, what is the use of any other para? What happened? Getting it? When we decided to give disclaimer of opinion, there is no point at all. Other matter para, emphasis of matter para, nothing we use. E-audit matter also we don't use. That's it. Only when you decided to give qualified opinion, then other matter para might come. See, other matter paragraph is given for flexibility purpose. It is not driving force. Getting it? That's it. Understood. Next. 550, I'll come back to that later. We will use 550 and 402 from notes. We will discuss it from the notes. I have a handwritten notes that we will discuss. I simplified the content of 550 and 402 as much as possible without missing the terminology. Next, 560, which is subsequent events. Which is subsequent events. The standard is not so popular because the circumstances given by this standard are extremely rare. First, we'll look at the definition of subsequent event as per auditing standard. Look, the subsequent event definition as per auditing standard, the subsequent events occurring after reporting period 10, India is 10, events occurring after reporting period 10, or accounting standard 4. Getting it? Events occurring after reporting date. Actually, India is 10 is what? Events occurring after the reporting period. They call it as reporting period. Whereas accounting standard 4 clearly says events occurring after balance sheet date. Now, according to the both, the definition of subsequent event is slightly different. Getting it? Now, what is India AS 10 or accounting standard 4 says regarding subsequent event? By the way, you're able to follow, all of you. Right. Because of the light, I couldn't see you all. Or else you can come and sit. Your choice. People can come and sit here, no issue. Yeah, you're flexible. Okay, your convenience. Now, accounting standard 4, nothing but accounting standard. What it says? Any events occurring after the balance sheet date, but on or before approval of financial statements. On or before approval of financial statements. Any events occurring after balance sheet date, let us assume balance sheet date is 31st March 2022, and on or before on or before approval of the financial statements, on or before approval of financial statements, which is somewhere around 10th June 2022. So 10th June 2022, listed companies within 60 days, or else 10th May we will put. Listed companies within 60 days, they should approve and release the financials and file with SEBI. So let us assume 10th May. So any events happening between this, yes or no? Any events happening between this period, intervening period, we call it as subsequent event. And the accounting standard classifies this subsequent events into two types. Those for which conditions exist on the balance sheet date and those otherwise. Getting it? Where conditions do not exist. If conditions exist on balance sheet date, we call it as adjusting event. Otherwise, we call it as non-adjusting event. And you might have seen all that stuff in NDAs. Now look at auditing standard definition. Here they use the word balance sheet and here they use the word approval of financials. Now you see audit report, SCF 560. Events occurring after date of financial statements. They use the word after the date of financial statements, but on or before date of auditor's report, and the definition is not yet over. And this is very important. This is the main part of the definition. And the fact came to the knowledge of auditor, after date of auditor's report. The fact came to the knowledge of auditor. After the date of auditor's report. This is the main problem. Getting it? This is the main issue. Now, what is date of financial statements? Nothing but the date on which the balance sheet is signed. Getting it? Nothing but the end of the reporting period. Actual definition, if you see, end of the reporting period, which is 31st March 2022. Now, date on or before date of auditor's report, they said. Now, what is the auditor's report date? What is the approval of financial statements date? In reality, we maintain the same dates. To avoid conflicts. What is the same date? 10th May 2022 only we will keep. Now, what is the date of audit report? Generally, as per the law, on or after approval. It can be on the date of approval of the financial statements or later date only we can use. We cannot use approval before date, because only when the financials are approved, on that only I should give audit report. But we, for the sake of convenience, for the sake of avoiding conflict, we keep the same date. Generally, we keep the same date. Now, here in the SCF 560 also, subsequent event happened when after the date of audit balance sheet, but on or before the date of audit report, nothing but approval. Same date only happened. But what if regarding that event, auditor don't know at the time of doing audit, he doesn't know anything at the time of signing the audit report. After he signed and hand over the audit report, now he suddenly came to know about one subsequent event. Getting it? Let us assume here 10 events happened. Getting it? Some 10 events happened. Out of which 8 events are adjusting events, or 8 events are adjusting and 2 are non-adjusting events. Getting it? Now, out of 8, 7 rectified by management already. On or before approval of financials, 7 adjusting events identified, accounted, properly presented and disclosed by management. One item they didn't discover. And even when I am doing audit also, I too did not discover that one item. But after I did the audit, now I discovered, what should I do? That is the question. And for this reason only this standard has came. Now, what if auditor identified any subsequent event which require adjustment in the financial statements was not identified at the time of signing the audit report, but was identified after signing the audit report? What auditor has to do? This is the question. Now, what the standard says? Okay, you have mentioned the date of audit report already, and now suddenly you got to know. Now the standard is asking this question: is the audit report still with you? Is the audit report still with you? Yes. Which means the audit report is not hand over to the management. Generally what happens, I will hand over the audit report to the management and they will prepare annual report and distribute to all the people. Getting it? So if the audit report is still with me, what will I do? First, I'll go and ask management, dear management, there's an adjusting event I found. You adjust on only 7, not 8. This is the 8th event adjusting. You didn't adjust the financials. Kindly adjust now. Management said, okay, sir, true and fair view. That is what our ultimate priority. They adjusted everything. They prepared revised financial statements again. And they finally once again approved it. New date they mentioned, 20th May. Getting it, revised approval. And I also give a new audit report. Old financials, my old audit report. Tear it and then close it. Throw it away. Not required. No need to document also. Are you getting the point? So I will give a new audit report with a new date. Are you clear? Suppose audit report is not with me. Audit report is already handed over to the management. And luckily, they have not distributed to public. They have not distributed to people. Date of issue of financial statements. What is it called as? Date of issue of financial statements. Suppose if I came to know about this subsequent event not adjusted after audit report, but before the financial statements are issued, then again I'll go to management. First I will explain the situation, discuss the management, see whether it requires adjustment, and if so, how management is going to address this issue. If management again same positively responded, let's rectify everything, then take back your audit report, give a new audit report with a new date. Understood? Suppose the financial statements are already issued to the public. Suppose if the financial statements are already issued to the public, your audit report is also given to the public. You gave unmodified opinion. Financial statements contains a material misstatement because of ignoring a adjusting event. So because of that, financial statements contains a material misstatement. What you will do? First again, discuss with audit committee, discuss with those charged with governance, ask them how they are going to address this issue to all the people who are already received the existing financials and audit report which contains a material misstatement. Getting it? And see how are they are going to address. Are they giving supplementary financial statements or supplementary information? Ask them. If at all management is not responding anything, people come for AGM. You also come for AGM. Read out at the AGM what happened exactly, the mistake. Actually, the standard will not give guidance on this. Standard will say the auditor shall take appropriate action. The standard actually says what? The auditor will take appropriate action. Suppose if management do not cooperate you, getting it, then also the standard says take appropriate action in the scenario. They don't actually give you the process. Maybe the application material might contain the process. In examination point of view, this much is not required. Are you clear? All of you, that's it. External event, this subsequent event definition is over. Now you see the definitions here. What is subsequent event? Whatever I have underlined here, that is most important in this. Next, what is the date of financials? It is the end of the latest period or reporting period. What is date of approval? Those who are having authority have asserted that they have taken responsibility for the financials. What is date of audit report? The date the auditor mentions in the report. And what is the date on which financials are issued? Date of issue of financial statements. It is a date that audit report and audited financials, everything are made available to third parties. Nothing but date of issue of annual report. Next. How do you auditor identify subsequent events? Generally, this is a general answer. It is not specific answer after audit report. Generally, how do auditor identify subsequent events? This is important question. Write about audit procedure for subsequent event. How do auditor identifies? Very simple. We first inquire the management. First, auditor shall identify subsequent event, which includes the following. These are actually sub-points. First, understand how management is identifying. Inquire management and top management. What are all the events they know? Look at new commitments, new borrowings. Look at any new assets, big transactions. And see whether any developments happened regarding contingencies for which condition already existed on balance sheet date. See any unusual accounting adjustments were made after the reporting period. And look at the minutes of the meetings. Look at the latest interim financials if at all already submitted. Already interim financials also came. Look at the interim financials. What not? You ask management, you talk to accountant. Getting it? Whatever 31st March balance sheet items were there, we will try to establish later evidences. How their trade payables were there. Are they subsequently paid? Trade receivables were there. Are they subsequently received? We will check until audit report date. Whatever information we have to check, we should check all that. So this is the audit procedure for subsequent event. Now, two cases. Facts came to the auditor after the date of audit report, but before the financials are issued. What is the procedure I just told? Facts became to the facts known to the auditor after the date of financial statements are issued. What procedure? They simply say auditor will take appropriate action. That's it. So with this, SAF 560 is also over. Clear? All of you? Next, written representation. Written representation. I think I told for all these standards, please refer CA Inter book only. Better refer CA Inter. You need not refer pronouncements for them. No need at all. Getting it. One or two additional concepts might be there beyond what you studied. But believe me, they are very structured. You can understand very clearly when you're reading it with an idea of whatever I'm giving it to you now. Now, written representation. So what is the written representation? So can I take just 5 minutes here? Yes. So let's continue with the next standard, that is written representation. What is this? Written representation. So first of all, what is a written representation? It is nothing but a written information or confirmation obtained by auditor from management. It's a written confirmation or additional information obtained by auditor from management to support his audit procedures, to support the evidence which he got. See, like suppose sales, whatever sales were made by the organization, are they accounted properly or not? I have gone through the entire selling process, billing process, accounting methodology, the controls, authorizations, some samples I have selected, vouchers I have verified, delivery challans I have seen, GST, e-way bills, everything I have gone through. And I conclude that, yeah, sales are reasonably accounted. Now I want a confirmation from the management explicitly that. Generally, no, we will ask for some acknowledgement, no. Suppose I'm asking you while taking class, have you understood? And you are orally saying that yes. If I ask you to give me a written confirmation, then that's nothing but written representation. Getting it? Auditor, as part of audit, will naturally involve in so many discussions with management, will naturally discuss so many important things with management. Wherever you feel it is important, there get a written representation, because that is also acting as an audit evidence. That is also an audit evidence. But remember, that cannot be treated as sufficient appropriate evidence. That is not sufficient. Why? Management is the one which prepared financials. They are the one who prepared entire books of accounts. Getting it? If at all you get management declaration and says everything is true and fair because management said it, what is the point of audit? What you are doing? So written representation can never be a substitute for audit procedure. Written representation can never be a substitute for sufficient appropriate audit evidence. Written representation is only corroborative in nature. It is only supportive in nature. It cannot replace main evidence. Able to understand? And when do we should get written representation? What is the requirement? When some other standard requires to you to obtain representation, get it. Example, we have seen today itself, SAF 501. Completeness of pending litigations. At the last point, obtain written representation that the management has disclosed all the known pending litigations. SAF 501 is asking you to get a representation, so you are getting. SAF 570 is asking you to get a representation regarding management future plan of action and feasibility of those plans. Yes or no? So there are many standards which is asking you to, SAF 550 is asking you to get a written representation that all the related party relationships and transactions were appropriately accounted and disclosed by the management. So when a standard is requiring, you have to take a representation, or wherever you feel necessary, you feel significant, you feel it is required, take a written representation. Are you getting it? Now in exam, how they can ask as a question? Written representation is treated as sufficient appropriate audit evidence. They'll give you a correct or incorrect question. Written representation definitely gives necessary information which auditor wants. However, they do not provide sufficient appropriate evidence on their own. Getting it? They're only supportive in nature. Like how you get response when you inquire the management, when you're asking questions, when you're talking to them, same way written representations are also similar to response, similar to audit evidence. Next, what should be the date and period covered by these representations? There is no point when you take representation after the date of audit report. You have to take representation, you have to get evidence before the date of audit report. We have seen Written representation is also audit evidence, but it is not main evidence. It is only supportive. And we have seen in audit report SA 700, date of audit report concept. The auditor shall not date the report earlier than the date on which is obtaining sufficient appropriate evidence, which means written representation, which is also treated as audit evidence, shall be obtained on or before audit report date, but not later than that. Getting it? So written representation shall be for all the financial statements and period referred in the audit report, and it should not be later than the date of auditor's report. Getting it? Next, from whom you should get written representation. This is, this question can be asked. As part of audit, the auditor can get written representation when it is required by a standard or when auditor requires it is necessary. Enumerate the circumstances or explain from whom the auditor can obtain written representation. This is an important question that can be asked. Written representation, the auditor shall require representation from management who are having responsibility for the financial statements and knowledge of the matter concerned. According to you, whom you think as part of management know that information, have that knowledge of the information, who is responsible for preparation of financial statements. From them only we generally get written representation. Those individuals may vary depending upon the governing structure of the entity. In some organization, board of directors, you may get written representation. In some organization, you may get a representation from finance manager on some issues. Getting it? So written representations therefore generally be received from CEO, CFO or other equivalent person in the entities that do not, or other equivalent persons like managing director. Because in a company, if MD is there, CEO will not be there if you check. If MD is there, CEO will not be there. Both are more or less similar designations. So a CEO need not be a director. MD means obviously a director. In some other situations, other parties such as those charged with governance, nothing but audit committee, are also responsible for preparation. In that case, you will get written representation from audit committee. If there is no audit committee, then you will get written representation from board of directors. If there is a CEO, CFO like that, you will get written representation from them. Getting it? This is little advanced, it's not required also. This is not required also. Suppose if you are having doubts about reliability of representation, if you are having doubts about reliability of written representation, like you are unable to trust, getting it, then auditor should try to get evidence alternatively. If at all, if auditor completely concludes there is no alternative evidence, and the representations given by management are not at all reliable and they are giving wrong information, false information, you can give a modified opinion as per SA 705. See, when written representation is not reliable means management is not giving you proper audit information, When they are not giving you required information, it's a limitation on audit evidence. Limitation on audit evidence means SA 705, non-availability of sufficient appropriate evidence. So, modified opinion. Suppose management is not providing the requested information. Check once again the integrity of the management. Discuss why they are not providing. If possible, discuss with next level higher authority and take appropriate action as per SA 705. We generally give disclaimer of opinion when written representations are not provided. Next. Here there is one question like the auditor could not conclude that management has provided the auditor with relevant information agreed in terms of audit engagement without asking it whether and receiving such information has been provided. Comment. The auditor could not conclude that management has provided the auditor with all relevant information agreed in terms of audit engagement without asking it whether and receiving confirmation that such information has been provided. Like probably the sentence is trying to communicate the requested information is not provided. The requested information is not provided, or it will come under requested information is provided, but it is doubtful. Let's look at the answer. The auditor shall request management to provide representation that it has fulfilled responsibility for preparation of financials. Audit evidence obtained during the audit that management had full responsibilities is not sufficient without obtaining confirmation from management about the same. Like what are they saying here is, SA 210 if you look at, There are something called responsibilities of management, or SA 200 is also talking about responsibilities of management. What are the management responsibilities? Management is responsible for preparation and presentation of financial statements. Management is responsible for design implementation of internal controls. Management is responsible to provide the auditor with whatever information asked for. Now, did they fulfill all these responsibilities? Only by asking them you can get it. Only by asking them, you can get it. Here, can auditor assume without asking for it that management fulfilled all the responsibilities? No, you can't assume like that. In order to know, in order to establish evidence that management has fulfilled their responsibilities, ask them whether they fulfilled responsibilities. Ask them to give written representation. So that is what this answer is. Getting it? Next. What are the circumstances where auditor will ask the management to reconfirm its acknowledgement and understanding of those responsibilities in written representation? This is the important keyword. This is important question, not the first one. This is important. What is this like? Suppose they gave written representation. They gave representation. You have gone through it. You are asking to reconfirm once again. In which scenario you will ask them to reconfirm once again? Generally, when we are doubtful about it, we will ask them to reconfirm. Or in significant risky areas, we will ask them to reconfirm. Look at those who signed the terms of audit engagement no longer have relevant responsibilities. Originally, when I am appointing as an auditor, the people who were part of audit committee were different. Later, by the time I am completing the audit, getting it, the people who are there as part of audit committee is different. So, in the entire financial reporting process, multiple people involved. Originally, I took a confirmation. Originally, I took a representation that audit committee fulfilled all the responsibility. Now, these are the new people who are there for the next 2 or 3 years. Now, whether do they fulfill all the responsibilities or not? Do they fulfill everything or not? Because people have changed. Once again, I will ask them to reconfirm. Getting it? Next. The terms of audit engagement were prepared in previous year. So, maybe terms of engagement were changed. I can say here, how can I interpret this? Terms of engagement were changed. Or there is any indication that management misunderstood their responsibilities, then once again I'll ask them to reconfirm. This is similar answer for SA 210. SA 210, able to recollect? In SA 210, we have when and all engagement letter should be issued once again. Similar answer you can write. Similar answer was there in SA 210. And changes in circumstances making it appropriate to do so. Here simultaneously you should also issue engagement letter once again so that management is not under confusion. Same situation were given in SA 210. Yes or no? That's it. So with this, representation standard is over. So we have completed in the second session of this, like what all we completed? 510, 505, 510, 560 and 580. That's it. For these standards, please refer this CA interview because this is covering comprehensively the discussion.